Hey everyone, welcome back to Corporate Decoder, the place where we untangle the financial mysteries that shape our world. And today we're diving deep into a report that is like a treasure map for investors, or maybe a really complicated instruction manual for a spaceship. Let's see what is inside. And hey, before we dive in, if you love getting clear, no-nonsense insights from these big corporate documents, hit that subscribe button. Also, we've got a great community over on Discord, link in the description, where we break down these filings even further. Alright, so we're looking at a report from Tidal Trust I, which is basically a holding company for a bunch of different traded funds or ETFs. Think of it like a collection of different investment baskets, each with its own special mix of assets. This report is an annual shareholder update covering up to the 31st of August 2025. We've got a few different funds under this umbrella, and they all have pretty interesting names. First up is the Unlimited HFEQ Equity Long Short ETF. A mouthful, I know. Basically, this fund tries to make money both when the stock market goes up and when it goes down, kind of like a balanced strategy. It only got going in July of 2025. So it has a very short history to look at. For a hypothetical $10,000 investment in HFEQ, the costs for this short period were about $13, which is pretty low, less than 1%. That is good to see. And how did it do for that $10,000 investment? At the end of August 2025, it was worth about $10,397. That is about a 4% gain in a little over a month and a half. Not bad at all, especially when you compare it to the S&P 500 Total Return Index, which grew to $10,322 in the same period. So HFEQ actually beat its benchmark. By the end of August 2025, the whole fund was about $10.4 million. Not huge, but considering it just started in July, it is a decent start. So what was in this fund? For the most part, it was invested in other traded funds, about 84%. They also held a bit of cash and other assets making up the rest. Looking at their top investments, they're really leaning into broad market indexes like the E-mini Nasdaq Negative 100 and the S&P 500, but also international markets like the MSI Emerging Markets and ETH indexes, plus some factor and sector specific ETFs. It looks like they're trying to get a diverse exposure to different parts of the market. Notably, they had a negative exposure, meaning they were betting against the E-mini S&P Real Estate Select sector, which might have hurt them if that sector did well, but was a short position, so it's designed to profit from a downturn there. Next up is the Unlimited HFGM Global Macro ETF. This one actually began operations back in April of 2025, so we have a bit more history here. As the name suggests, it takes a broad global look at different markets. For a $10,000 investment, the costs here were about $39 for the period, still very reasonable at less than 1%. And the performance. This fund really shone. That $10,000 investment at the start of its life in April 2025 grew to nearly $11,900 by the end of August. That is an incredible return of almost 19% since its launch. Compare that to the Bloomberg US Aggregate Bond Index, which only grew to $10,325 in the same time frame. This fund absolutely crushed its benchmark and also did very well in the current year, which ended August 2025, returning over 19% against less than 3.5% for the bond index. This fund is a lot bigger, reaching over $34 million in assets by August 2025. Its investments were also diverse, with about 68% in traded funds, and the rest in cash and other assets. Their top investments are super interesting. They're heavily weighted towards the E-mini S&P 500 index, showing a strong bet on the US market, but they also have significant positions in things like the British Pound US dollar exchange rate, live cattle, and the iBoxX bond index. They even have negative exposures to things like the Japanese yen US dollar exchange rate and US Treasury 5-year notes, meaning they were betting on these going down. This is a truly global macro strategy, playing currencies, bonds, and even commodities. Moving right along, we have the Unlimited HFMF Managed Futures ETF. Like the HFEQ ETF, this one also launched in July of 2025, so it is a new kid on the block. The costs for a $10,000 investment were identical to HFAQ, just $13. Or 0.95% expressed as a percentage for the period. Performance-wise, it managed to grow that $10,000 investment to about $10,380 by the end of August. That is a nearly 4% return, again beating its benchmark, the Bloomberg US Aggregate Bond Index, which saw a return of about 1.8%. This fund is smaller, with about $3.1 million in assets. Interestingly, this fund is heavily weighted towards cash and other assets, making up over 55% of its holdings. This suggests it might be waiting for opportunities or acting as a hedge. The rest is in short-term investments. Its top investments are very focused. The E-mini S&P 500 index is its largest position, followed by a strong bet on the British pound US dollar exchange rate and then live cattle. It also has negative exposures to the Japanese yen US dollar exchange rate and soybeans. It seems to be using futures contracts to express these views on currencies, commodities, and equities. Finally, we have the Unlimited HFND Multi-Strategy Return Tracker ETF. This is the oldest fund in this group, having started in October of 2022, so we have a good amount of historical data here. For this fund, the costs for the past year were about $120 on a $10,000 investment. That is 1.16%, a bit higher than the others, but still within a reasonable range for these types of strategies. And its performance, it generated a return of about 7.46% for the year ending the 31st of August 2025. That is quite solid, especially when you look at its benchmark, the Bloomberg US Aggregate Bond Index, which returned about 3.14% over the same period. Since its inception in late 2022, it has returned about 6.75% annually. It really had a strong performance in the last year, which is great for investors. This fund is quite substantial, with over $28 million in assets. Its investments are also diversified, with over 60% in exchange, traded funds, and nearly 30% in cash and short-term investments. The top investments showcase a broad strategy, including the iBoxX Bond Index, Mississippi CI Emerging Markets Index, and the E-mini S&P 500 Index. It also uses currency and commodity futures, and has a significant negative exposure to US Treasury 5-year notes. This clearly shows a multi-strategy approach, not just betting on one market direction. Diving into the detailed financial statements, which are really the core of these reports, for the HFEQ ETF, we see their investments are mainly in other ETFs, like the Consumer Discretionary Select Sector Spider Fund and the Energy Select Sector Spider Fund. They also hold money market funds to keep some cash readily available. For the HFGM Global Macro ETF, the holdings are much more varied, reflecting that global macro strategy. They have significant stakes in ETFs, like the iShares Tips Bond ETF, which is sensitive to inflation, and Vanguard Emerging Markets Government Bond ETF. They also hold futures contracts on commodities like coffee and gold, and currency exchange rates. The HFMF Managed Futures ETF is interesting because its largest holdings are short-term investments and money market funds, making up over 55% of its assets. This suggests it's holding back a lot of cash, perhaps waiting for a specific market event or hedging. The HFND Multi-Strategy ETF has a very diverse set of holdings, spanning many different sector ETFs, bond ETFs, and money market funds. It seems to be keeping a relatively large cash position as well, close to 30%. Looking at the statements of assets and liabilities, we can see the total net assets for each fund as of the 31st of August 2025. HFU has about $10.4 million. HFGM has over $34 million. HFMF has about $3.1 million, and HFND has over $28 million. These numbers show the scale of each fund. The statements of operations show how each fund made and spent money. For HFAQ, it actually had a small loss from its operations so far, mainly due to investment advisory fees outweighing its limited income. HFGM, on the other hand, showed a strong positive net investment income and significant realized and unrealized gains, explaining its great performance. HFMF had a small positive net investment income. HFND also showed a substantial net investment income and realized gains contributing to its overall growth. These sections detail how the net assets changed throughout the reporting period. It looks like HFEQ and HFMF had their assets increase primarily from new investor money coming in, since they started operations mid-year. HFGM also saw significant growth from operations. HFND, being older, had a decrease in net assets for the year, largely due to investor redemptions, but still managed a positive return from its operations. The financial highlights per S-Hair break down the performance more granularly. For HFAQ, the net asset value per S-Hair ended at $20.8. For HFGM, it was $29.75. HFMF ended at $20.76 and HFND at $22.88. These numbers reflect the performance we saw in the earlier summary tables. It's particularly striking to see how HFGM's per S-Hair value grew so much since its inception in April. Now, these notes are where the really technical stuff lives, but they explain the nuts and bolts of how the funds work. They talk about how they value their investments, which is important because it affects the NAV. They mention different levels of inputs for valuation, with level 1 being the most straightforward, like quoted prices in active markets, and level 3 being the most subjective, based on less observable Data. For HFEQ, almost all their investments are level 1, meaning they're valued based on readily available market prices. This is good for transparency. HFGM also primarily uses level 1 inputs for its investments, but it does have some assets classified as level 3 from its futures contracts. This is typical for derivatives, as their value can be harder to pin down precisely in less active markets. Speaking of derivatives, the funds heavily use futures contracts. These are agreements to buy or sell something at a future date and price. They're used for hedging or to get exposure to different markets more efficiently. The report shows the breakdown of these contract values, and importantly, how much unrealized appreciation or depreciation they had. For HFGM, for instance, their futures contracts generated significant unrealized gains, contributing to that strong performance. The report explains that these funds are part of Tidal Trust I and that Tidal Investments LLC is the investment advisor, while Unlimited Funds Inc. is the sub-advisor. This is a common structure where one firm manages the overall relationship and another handles the day-to-day investment decisions. This section is about how the money flows between the different parties involved. The advisory fee for all these funds is a unitary fee of 0.95%. This is interesting because it means the advisor pays for most of the fund's operating expenses out of that fee. The sub-advisor, Unlimited, gets paid by the advisor, which is an interesting financial arrangement. Finally, you have the auditor's report. Cohen & Company Limited has audited these financial statements. They state that in their opinion, the financial statements present fairly in all material respects the financial position of each fund. This is a crucial sign of confidence in the numbers. So what is the big picture here? We've got a group of ETFs from Tidal Trust I, most of them launched very recently in 2025. The stars of the show are HFGM and HFND. HFGM delivered phenomenal returns since its April launch, significantly outperforming its benchmark. This suggests the global macro strategy is working really well for them right now, leveraging diverse asset classes and even negative bets. HFND, the older of the group, also showed solid performance, outperforming its bond benchmark with a multi-strategy approach. HFEQ also managed to beat its benchmark in its short operating history, which is a good sign. HFMF, while positive, is holding a lot of cash, which could be a cautious stance or setting up for future opportunities. The fees across the board are competitive, especially the unitary fee structure where many expenses are covered. The main risks are related to the complex strategies these funds employ using derivatives and targeting specific market segments, which can amplify both gains and losses. Overall, it looks like Tidal Trust I has launched some interesting and, in the case of HFGM, impressively performing ETFs. The strong returns from HFGM in particular are worth noting, though it is important to remember that past performance is not a guarantee of future results, especially with newer funds. We will be watching to see if HFGM can maintain this high level of outperformance and if the other funds continue to gain traction. Alright, that is our deep dive into these unlimited ETFs. What is your take on these performance numbers and strategies? Do any of these funds catch your eye? Let me know in the comments below if you found this analysis valuable. Please hit that like button, subscribe to Corporate Decoder for more breakdowns like this, and don't forget to join our Discord community, linked in the description for more in-depth discussions. Thanks for watching, and I'll see you in the next video.